Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 186 of the AJ Brown Show. Today is May 30th. My name is Cyprian Francis, and with me, as always, Mr. AJ Brown. Good morning, AJ. How you doing?
I'm doing really well. There's a lot going on in the markets this week, even though it was a short week. But yeah,
I,
overall, I'm doing well.
so you and I are about 3 hours apart, and I don't
Right.
know if your morning is like me, but when I wake up in the morning, usually the first thing that comes to mind is what did our president tweet today to move the market? And
Uh-huh.
today was another one of those stories where it was, hey, uh, a reporter asked him about the taco trade. I don't think he liked it very much. And now he goes to Twitter and he's like, I'm not very happy with China. So we're going to have some problems.
Yeah.
Besides that, pretty choppy week. Where do you want to get the day started?
Well, let's actually get to some more reliable data. Why don't we take a look? We haven't been paying much attention to the economic calendar, but why don't we take a look at what's been happening this week, even though it was a short week? Um, on Tuesday, we had the couple of different things that I take a look at. Durable goods orders. So we should take a look at that. We also had consumer confidence, which I really pay a lot of attention to. Um, Wednesday, we had our Federal Open Market Committee meeting minutes. I can give you a little summary on that. We had GDP numbers. This is the second revision that we call this the preliminary report. Last month we got the advanced. This is quarter one numbers. And then, of course, today, personal income and outlays. So, why don't we start with durable goods orders? So, our durable goods orders, so they're pretty bad, right? And so, new orders are down 6.3%. Of course, we were expecting them to be down 8.1%. So I guess it's good news that they're down. But then you take a look at these when you factor out transportation. So this kind of maybe makes sense, right? Transportation is cars and trucks and things like that. That's been pretty flat, right? Across the board. So basically, last month we had on all this news of tariffs going on autos and whether it be European brands or Japanese brands that autos were going to be expensive. So people ran out, if they were thinking about buying a car in the next 2 years, they ran out and bought a car in April or in May. I'm sorry, in March because they were worried about the prices going through the roofs. Nobody knew. And so in April, we see that kind of, came and went. That was just a blip on the radar. Maybe that's the scoop. But I guess overall durable goods orders, I guess they're somewhat flat, if not a little bit down. These are, by the way, I apologize. Durable goods are things that people don't buy very often, right? Like cars or washing machines, or these are things that stay around for 5 to 20 years, right? HVAC units, things like that.
And we
So
expected this for the most part. Like the we knew that if there was going to be a slowdown in purchases, this is kind of where it would start.
exactly. Exactly. Consumer confidence, I pay a lot of attention to. Last month, so I don't know if you remember about 3 or 4 weeks ago, I said I had rarely in the 20, oh gosh, almost 30 years that I've been watching the markets. I almost forget how old I am. For the 30 years that I've been watching the market carefully, I have rarely seen this go below 100, right? I've rarely seen that number go below 100. And last month for April, we saw this number go down to 86. They actually revised it again. They looked at the data closer and they went down about 3 more tenths of a point. I mean, I've never seen it that low. So this kind of surprised people that for May it popped back up. It's still below 100, which is really negative consumer confidence, but it's at 98. So there was a little bit of an applaud. They were expecting it to come in much lower, and it popped up a little bit for May. So I'm not sure if that's a blip on the radar, but that's actually good news because the consumer is what drives the economy. At least it always has been what drives the economy here in the United States. It's people buying stuff and all the people in that chain making money. So overall, I think that's good news. Durable goods orders, I mean, that's neither here or there. It's shrinking a little bit. Now, the Fed, right? After COVID, the Fed kind of had the pole position. They were leading things with their quantitative easing and then quantitative tightening and their rate hikes and drops. Now the Fed is not in the pole position, they're in the reactive position. And I don't know if people remember, but about 2 weeks after every Fed meeting, we get their meeting minutes. So we get to see what they discussed during their meetings. And pretty much they didn't discuss much besides the uncertainty and confusion around trade policy, which is tariffs, right? So they're basically now not leading any sort of monetary. They're playing defense. They're going to have to adjust, and their main thing that they talked about was we don't know left from right. We don't know how to react because these things are changing overnight. So that didn't give me any sort of comfort, but that's where they are. They're like, do we raise rates? Do we lower rates? Do we do more quantitative tightening to reload our weapons? Should we ever have another market collapse like we had during COVID or during the 2008 recession? They don't know what to do because nothing is consistent day in and day out. GDP numbers hardly changed. And then this was interesting. Today, this morning, this is the Fed's, inflation report. Inflation really so we're looking at the personal consumption and expenditure. First of all, incomes for April, incomes continue to grow, so that's a good thing. But the inflation, which is this personal consumption expenditures, I mean, these numbers are low, and so that's giving the Fed kind of a reason, possibly, to lower rates sooner than later. And so, you know, again, their uncertainty may make them not want to act, but inflation is pretty much, getting under control. It's getting to that target that they had talked about, but have times changed, right? That target was under a whole different environment. Um, the target is the target, but the environment has changed. We're anything but consistent right now. So maybe the Fed will want to do something else. We can take a look if you want, Sip, at the Federal Reserve kind of the interest rate expectation. I got that right here. It's coming up. This is the CME Fed Watch tool, and I should have had it preloaded. So here we are looking at the expectation for any sort of drop in interest rates for this June meeting is almost nil. If we take a look at July, none, very, 3/4 of investors are not expecting any rate drop in July now. September, okay, by September, about half of the investors think that there will be a 1/4 point rate drop. So that moved from July to September. October, maybe still sticking. If it's not in September, maybe October. And then by December, it looks like the majority of investors are expecting that we might have two. Earlier this year, we were thinking four, a total rate drop of 1%. Now it looks like investors for the year going through December are only thinking about a 1/2 point rate drop. And that looks like people aren't expecting that to start until September.
It seems like one of those situations where at least the next two meetings, if the chairman comes out and says, "Yeah, we're getting close to cutting rates now," or we're thinking that it might be like the verbiage itself could be enough of a catalyst to kind of
Totally
calm the
true, Sip.
markets, right? Because doesn't that affect the bonds right away, right? And I keep hearing bonds this week that when there's this tariff news here and there's tariff news that, everyone just kind of looks at the bonds because they're going to be telling the story that everyone else can react to.
Yeah. So you're right. The rhetoric actually has more direct effect on the bonds than their rate hikes or drops, because the rate hikes and drops is short term, and it's those long term bonds, the 10-year bonds. In fact, we have a little we always take a look at the comparison of the short to the long term. Right now they're kind of at break even. But here, let's take a look. It looks like, and I apologize for not having this pre-queued up. Let me see if I can log in. I've got all the bonds in my profile here. Let's see if my password filler outer shows up or not. Sometimes, okay, I'm not going to worry about that. Let's come on over here to the other tool that the Fed has that they don't often talk about is their quantitative easing and quantitative tightening. Let's take a look at their balance sheet, because this does have a direct effect on bonds, because they're actually buying and selling bonds, and they continue to sell bonds, right? Selling bonds by the Fed, right? Even, well, and it looks like they're getting quite aggressive. If you can see this line here, they're really, I don't know what their thought process is, because when they sell this much bonds, and we're talking, let's see, they went from just 2 weeks ago 6.7 trillion down to 6.67 trillion. So that looks like about $40 billion worth of bonds that they sold. If my math is right there, I think it is. So when they sell that many bonds back to the market, that's going to cause kind of a supply glut, and it's going to make it so that the yields actually go higher, right? So they're actually adding fuel. So why would they do something like this? I mean, your guess is as good as mine, because we can't get inside of the head of the Fed. But I almost feel like, and this is AJ Brown talking, Sip, they want to reload this tool, meaning they want to get their balance sheet as low as possible and as quickly as possible, because I feel like they're thinking, hey, now that we're in the defensive position and we're going to be asked to come in and mop any mistakes up that happen in the economy, like we're going to have to come in an emergency, they want to have their tools ready. That's kind of my take on it, because I don't see why they would be doing quantitative tightening right now when the 10-year bond is under pressure. Besides the fact that if they don't lower their balance sheet, um, they're not going to be ready for the next kind of global meltdown. And maybe they think that all this, stuff going on with trade wars could cause a global meltdown, and that they'll need to be ready.
Yeah, I mean all that makes sense. And I believe Jerome Powell even met with the White House this week, and everybody was wondering what happened in that conversation, whether President Trump told him he needs to lower rates. But I think from what I saw, they didn't have any discussion on economic policy, which I find shocking, but maybe they were just told to say that to the public. All right, with all this
I
data,
almost I almost feel like, just to add one last thing, I almost feel like, somebody has to create, one of these organizations has to be stable. If one of them was being unstable, if they were both being unstable, I mean, I think that would cause more fear and uncertainty, and cause, people, everyday persons, to panic more. So I feel like the Fed is just holding stable, because they know that what's happening at the fiscal level is far from stable. That's my interpretation.
And thankfully that's what our founding fathers wanted when they created our democracy, with different houses having different powers and one having to adhere to the other, and ultimately that's kind of how we can maintain some stability in the grand scheme of things. But what I was going to turn to is, it's a lot of good economic data for the most part, but when I was looking at the charts
Yeah.
before today's show, I was like, gosh, that's a lot of chop. Not to mention the gaps, the pre-market gaps up, pre-market
Mhm.
gaps down, just like
Mhm.
very unfriendly to the technician. We talked about chop. We talked about that being good for a lot of our strategies.
Mhm.
We haven't got our pullback. So are you seeing chop as well? Is that kind of your perspective?
I mean, so why are there overnight gaps? It's because there's stuff happening 24 hours a day, right? We were kind of excited when we came back from that long holiday because we had rumors that, you know, conversations were happening with the European groups, and we last week we came to supposedly an agreement with China. And so, when we came back on Tuesday, people were kind of excited. But then became under pressure on Wednesday, like maybe that wasn't the case. And then Wednesday evening, we got that huge news about a federal trade court. We'll talk about this more in a little bit, but a federal trade court halting Trump's tariffs, and that actually, it's funny, halting all that tariff discussion. When the market opened on Thursday, yesterday, that caused investors to be excited. I'm telling you, investors are really and market traders are really searching for stability right now. And so when they're like, "Hey, we're going to take away this crazy tariff stuff," people were like, "Yes, cool, certainty in the markets." And then by Wednesday afternoon, an appeals court said, Okay, we need to look at this closer. And in the meantime, Trump can still mess with tariffs." And so the market kind of collapsed. And today the market doesn't know left or right because Trump woke up saying, "I don't like what China's doing, and I'm going to mess with tariffs against China because they're not withholding their trade deals." So again, uh, the taco thing, paying attention to X, or Twitter, formerly known as Twitter, or Truth Social, is really what's guiding investors right now, not fundamentals or technicals or anything like that.
Yeah, the other big news for the week was the Nvidia earnings, which I
Hmm.
know the timing of that aftermarket, and then the uh the international courts were kind of very close to each other, and it pushed the market up like 2% in after hours, just on a lot of positivity in that respect. And partially because Nvidia is tied to so many companies, and when it moves like that, it moves some of the ETFs, the Nasdaq, everything's
Hmm.
kind of correlated. And I think for the most part they had positive things to say as well,
Hmm.
in terms of, hey, we've got demand. uh you know, we can still, I don't know how much they touched on China, but they didn't say that it was really affecting them so negatively.
Right.
Did you catch any of the Nvidia chatter?
Yeah, there's such a big component rate right now with all of the AI advances in the last couple of years. And so yeah, a lot of people are excited about that. And also Japan made a big announcement that they're not going to go crazy with long-term debt, which, Japan is in, people think that Japan is out of the game when it comes to technology. I would say Japan, Taiwan, Korea, these entities in the Far East, and China, are very much in the game when it comes to technology. So it's all playing a good thing. But again, if w- when we're talking about Nvidia, or we're even talking about sovereign nations like Japan, Korea, all that, I almost, the analogy I think about is we're talking about players of the game. Like if we're watching football or basketball, you're talking about like LeBron James, you're talking about Shaq, right? You're talking about those guys and how well they're doing. But you got to remember that if the rule makers behind the game are saying, well, today the basketball hoop is going to be at 9 feet, and tomorrow the basketball hoop is going to be at 11 feet, and we're not going to tell the players until the game starts, that's going to F everybody up. So, yeah, the players, even with the rules changing, the players are strong, man. Whether it's the countries that are supporting the different big corporations or the big names themselves, even small business seems to be quite resilient, right? But the rules, the thing that's, you know, keeping investors on the edge of their seat is that indeed the rules are changing, and there's no forewarning about the rules or preparation. I mean, here it also, I was reading about how in where I live in a county called Fairfax County, Virginia, the local county is thinking about making public trash pickup, right? We have a bunch of different companies that offer private trash here. And you have to choose, which is supposedly great, but it turns out that you've got parallel fleets of all these trucks, whatever. So Fairfax County is thinking of making it part of our property taxes, and that they're just going to simplify everything and just deliver trash service to everyone. But in doing so, they have to give these companies like 10 years notice so that they can figure out what to do with their assets, right? That's like responsible decision making, right? Letting the businesses know, versus like overnight saying, guess what? There's no trash service tomorrow. And then the next day saying, psych, trash is back on, right? So that's kind of what I think about when I think about what's going on right now. But that's just me, because I like consistency. I like to be able to plan my trades, and the fact that things keep changing, the boundaries keep changing. Anyway, I'll let you. I'm on a rant here.
Well,
Soapbox
we're
time.
gonna we're gonna dig into it a little bit more,
Cool.
because it is kind of, we touched on it last week, because last Friday I heard this term of the taco trade for the first time, and I think you heard it for the first time. But the rest of the week it was very hot in the news, very hot on the socials, and a
He does not like that term.
and a reporter actually asked him about it. So we're
Yeah,
gonna
pissed
we're
him
gonna
off.
dig into that a little bit more, because I've got a couple funny things to share. But
Great.
as always, folks, we appreciate you guys tuning in. We are broadcasting live. We've got AJ's pick of the week coming up. We've got our speed round with a couple names from our lovely fan base all across the country. As always, AJ's quick links. The link to that is in the chat, so head on over there. It's got all of AJ's goodies, social links, some of the free indicators that you'll see, access to the options lookup tool, which I know AJ will probably pull up as he's making some analysis, and just overall, love from the community, and instructions on how you can get involved and how you can come and be a member. So head on over there, become a fan, show some love. We're going to take a short break, and we're going to talk about tacos. Living on the West Coast, I love tacos. Big taco fan. We've got taco stands all over the place. But this week, the verbiage is not around the food. It's more of around a trading strategy. So sit tight, folks, and we'll be back to talk tacos, quesadillas, Mexican pizzas, burritos.
Thank you.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So AJ, you and I talk about AI all the time, and I just the way that these images get produced so quickly. This one caught my attention. I really like this one because the chicken looks like the president himself, which I don't think he was very fond of that. This one was pretty cool to me, Taco Tower. But the taco trade is essentially Trump always chickens out. And that's basically in response to coming out with a statement about a certain level of tariffs. A couple days go by, coming back out and saying, hey, I'm extending the date or I'm lowering the tariffs, da, da, da. And this was actually the tweet from this morning, just, a few hours ago, where he's basically saying, China is making this difficult and I'm not happy about it. And one of the funniest things that I get from these tweets is how people analyze them. And if you go to the bottom, it's like, oh, the president used capitalization and he ended it with so much for being Mr. Nice Guy. Oh, he's really upset. And so, AJ, your thoughts on the taco trade, your advice. Have you downloaded your Truth Social? Or do you look to see what the president is saying before you go into your analysis? Do you have to? Does everyone kind of have to at this point?
And if you want to be, yes, you gotta have these apps. You gotta be subscribed to both the Trump, and then even though Elon Musk has stepped down as a full-time Doge, I'm sure he's still got his fingers in that, but he's got to go run Tesla. He's got to go run SpaceX. SpaceX had, although they said that it was, fail forward, where you make mistakes, but you learn from it. They had yet another Starship kind of explode in the air this past week. Tesla's down, across the board, across globally with their sales. So he's got to go do some things, but I would still subscribe to him as well. Here's the scoop. You got to pay attention to a couple of things. Number one, and I got to say, behind a lot of this economic fiscal stuff is a gentleman that in the past I have actually thought the guy, I think he might have lost a marble. His name's Peter Navarro. You've probably heard his name being thrown around. He's kind of behind a lot of the economic stuff. And I've been a devotee or a fanboy of Peter Navarro, but this is not the Peter Navarro that I think that I have been a fanboy of in the last years. He's kind of almost off the rails. But this is what happened on Wednesday night. A federal trade court. So this is a court that was set up back under the Reagan administration. In fact, there's a Reagan appointee, there's a Obama appointee, and then there's actually a Trump appointee from his first term. These guys adjudicate from the U.S. perspective on trade problems, right? And so these guys have been looking at this whole tariff thing. I don't know if you guys know out there in the world who are watching our YouTube channel, but the way that Trump is allowed to do this tariff things is like on day one of his presidency, he basically established a national emergency, right? Which, if officially there's a national emergency, the president gets to take control of tariffs, because tariffs historically are done by Congress, right? So he established that there's a national emergency. He used this very unused Emergency Act. I think it's only been used a couple times before in the whole American history to say, hey, we're in trouble and I'm taking control, right? So this federal trade group, this judicial branch, on Wednesday night said, hey, we've been looking at this, and number one, we're not sure you can use that law the way you used it, because the definition of emergency, maybe it's not an emergency. And number two, even if it is the emergency, I'm not sure you can play with tariffs the way you are based on what this act says. So they basically said you have 10 days to stop it. And not only do you have 10 days to stop it, you also have to undo all the tariffs, not the ones that he did in his first term and that Biden not only kept, but actually Biden increased some of the tariffs that he did in his first term. These were the ones on steel and autos, right? That's a whole different thing. This is the country by country, 10% across the board, the Liberation Day tariffs, the things that have been driving the markets crazy, right? This court basically said you have 10 days to not only undo it, but stop doing it moving forward. And also, any money you collected, if you've collected any money from these tariffs, and I don't know how logistically we could do this, you got to give the money back. So that was Wednesday night. And so, investors Thursday morning were like, yeah, finally, stability. No more of this insanity. Give the rules back to Congress and everything. Of course, Trump was like livid, and so was Peter Navarro, and I can't think of Stephen Miller. That's the other guy behind us. Um, those guys, threatened, and it probably will wind up at the Supreme Court, but an appeals court halted the halt as of yesterday afternoon. But we need to keep an eye on this because actually, at least from trading perspective, calming down the whole tariff discussion and making it a little bit more, rather than what's happening on X would be really good for us people who are trading the markets right now. So I'm actually watching this very carefully. I think that the appeals court is waiting for um, the folks that brought this case to the lower court to respond, and so we're going to see this play out probably sooner than later. But the question is will Trump continue to play around with tariffs the way that he is on a country by country basis? Hopefully we get clarity in like the next 2 weeks. And then there's one other thing, Sip, that I need to bring up, and that is, have you heard of this one big beautiful bill act that's currently passed one part of Congress? It's now going to the Senate, and there's probably going to be some negotiating. You heard of that?
It's in the news headlines, and I don't know what to make of bills anymore because they pack so many things into it. It's like, what is it really about one thing, or is it about 15 things that you want to put in 200 pages of legislature?
Well, you heard what Elon said, right? He's like, Elon came out on Sunday on a CBS News interview, and he's like, yeah, I'm kind of underwhelmed, right? Because I want debt to get under control. And I want the work that I've done with Doge to mean something. And this bill kind of spends way too much. It actually adds to the debt. And so he said, I remember his last line was like, a bill could be big or it could be beautiful, but it can't be both, right? So he kind of like, and then a reporter asked Trump about it, and Trump totally went off topic and didn't even answer what he thought about Elon's comments. But I had chat, right? Because this bill is 1,000 pages long, and there's a lot in it. You're right. It's not just, it's almost like we should have a rule that says each bill has to be, about the bill. You can't combine stuff because it gets really confusing. I had chat go through it. There's one part that's interesting, and that is they're talking about if this bill passes as it is, which it won't because we already know that the Senate wants to mess around with it. But if it passes as is, they're going to take the teeth out of the marshal service that the judicial branch uses. In other words, if the judicial branch, like this federal trade court, gives a ruling, there's not going to be any way to enforce it, right? Right now, if for instance somebody doesn't do what the judicial branch says they do, then the judicial branch could come back and basically, go have the marshals come after you and blah blah blah, right? That's gone. That would be highly decreased under this one big beautiful bill act. So that's kind of an interesting thing, kind of disarming the judicial branch so that you can just ignore whatever rulings they say. But the other one that people should pay attention to is Section 899, right? This is and I found this hidden. I had to have chat, and then they brought up the actual pages, and I read the pages over and over. This is a way to tax foreign investors in the United States. And the wording of it says at the president's discretion, right? So basically, you can pick and choose what foreign investors you tax, but the tax is 5% and it can increase every year all the way up to 20%. So, for instance, if you have somebody from abroad who's investing in the markets or investing in companies or investing any way their money into US companies, they would actually get taxed on that. And so even if this tariff stuff gets ruled, unconstitutional, and they put a halt on this, it looks like that there's going to be some backdoor ways that, this they're very smart right now in this kind of like, we want to repatriate everything. They're looking at taxing foreign investors through tariffs, through income taxes, through trade taxes. It's very interesting. People should check out Section 899 of this new tax bill. And my big thing is I'm going to watch as it goes back and forth between the Senate and the Congress to see if Section 899 stays or if it gets modified. And same with that Marshall component. See if the Senate and the House do agree that they're going to take the teeth out of the judicial branch. That would be something very interesting too.
Yeah, when I first heard the international courts headlines, I was like, "What the hell is an international court?" And like, why would the president and the White House ever listen to an international court? I was just like, it was like, yeah, they came out and said it, but like, I mean, who's gonna enforce it or who's gonna stop the president? It was very confusing because it's like, how many courts are there? And
Well,
uh,
it's actually part of our courts, the US courts. It's a court that focuses on cases of US trade. So it is a US court, right?
Interesting. All right, well, we'll keep an eye on it.
Confusing.
Yeah, and just the legislature being 1,000 pages long is always like, well, thankfully we have AI now to run through all 1,000 pages and give me the
Yeah.
cliff note.
Yeah. I'm very thankful for these language learning models because, man, they make it possible. And you can say to it, please dumb it down for AJ. And it does, so that I can understand it. And it's not in just geek speak. I understand like trading geek speak, but I don't understand politician geek speak.
And then it's written in lawyer language, which is always like, from the 18th century, this and thou and
Yeah,
thys.
right. Right.
All right, cool. Well, a lot of news, a lot of chatter, a lot of social memes coming out. But what does it all mean for our pocketbooks?
Yeah.
I know that in the past, there's 28 different ways to trade options: up, down, sideways. We seem to be in that sideways pattern the past 7-10 days, 2 weeks or so. So let's dig into some potential opportunities on how we can take advantage of certain setups. With your pick of the week for the week is I don't know what the name of this company is. Ticker symbol APLD, Applied Digital. What do you like here? It's definitely a cheap stock. So what's the setup here, AJ?
Okay, so I'm going out on a limb here. This is not the typical company that I would trade option strategies against, but this one's appealing to me because, okay, Applied Digital. First of all, what is the company? Company based in Dallas, and what they focus on is I have it right here: next generation data centers for the blockchain infrastructure, right? So they're making data centers specifically for supporting the blockchain. Now, of course, the blockchain and crypto is getting all sorts of kudos these days from, the current regulations. In fact, I don't know if you paid attention to this, SIP, but it looks like, some rules that the Biden administration put in place about not being able to invest your IRAs, your retirement accounts, into crypto. It looks like the Trump administration might be rolling that back. So people might be putting some crypto into their retirement accounts in the next, we might get an answer on that pretty soon. So Applied Digital Corp, it's all about infrastructure for the blockchain. And the blockchain, you guys got to remember, is potentially a lot more than just cryptocurrency. It's just, it's a way of communicating basically, through, it's a way of keeping things secure, a different way than just putting it into one company's hands. Here's what I like on the technical side. I'm thinking about, and I'm getting what's materializing. Let me go ahead and switch my indicator. These are the indicators, by the way, that you can download from our website for free. Just got to get free access to the website. I got a signal yesterday evening to consider shorting Applied Digital Corp. Now, I haven't gotten the follow through today. If I don't get the follow through, I'm not going to short it, but I'm going to look again on Monday or subsequent days. And I'm either going to short this stock, SIP, or I'm going to get a signal that negates this signal. But so far, I want to short this. And that's what I'm recommending. And I don't want to do anything more than short the stock. I don't want to try to buy a substitute option. And let me show you the secret why. Check this out. I'm going to come over here. We're going to look at the August option. This is our protective option. Actually, I want to look at the June option. And I'm going to come over here to these put options. I don't know if you can notice this right, but the going price of these options, like take, for instance, this $10 option, it's got something like, and actually, I do want to look at the August option. Let's come over here and look at these $10 puts. I don't know if you notice how much extrinsic value is in this option price. Extrinsic value is that emotional component. It basically is a combination of how much time before expiration, but also it's the demand. How much are these options really wanting to be purchased in order to hedge people who own this stock? And it's through the roof. In other words, I don't know if I can stretch this out here. Let me get rid of this guy right here if I can. You can see here that these oh, good, I can hover over it. These numbers of implied volatility, SIP, are out of this world, 128%. In other words, I want to get into the business of selling people these options because people are buying these options and driving the price up. And so if the price is that high, I want to be selling these options to those people. In order for me to be selling these put options, I need to get a short position in place. So back to the strategy. The strategy is once I get my signal that I've got a top found, and I want to make sure that that signal, I'm not going to pull the trigger on this trade until I see the whites of their eyes. So I need to have next day follow through, subsequent day follow through. But I want to put my short position in place. And it's cheap enough that, even though it's a shorting position and you need to have, a retail margin account to do a shorting position, it's cheap enough that it's not a big, it's not going to be a big borrow from your organization. I want to short this stock, and then that puts me in the position to sell those put options every time I find a bottom. So that's the play. The play is let's wait for the symbol, let's short this stock, and then once a bottom is found, I'm going to start selling those put options and capitalizing on the fact that people are willing to pay me a fortune for those put options.
Yeah, I'll be frank. I'm always been a little bit confused with the implied volatility like component when looking at options, but that really gave a good perspective of how you get on that other side of being a premium seller to the downside, right? Not necessarily just the protecting
That's
for the
right.
long trades. Yeah. And with the price point here under $10, under $6 at the moment, the short side of the stock, makes it very feasible. So love the setup here. APLD, Applied Digital. So we'll keep an eye on. I'm going to put this one on my watch list just because I want to see how it plays out. And your time frame, you said August. Is that what you were looking at?
Well, I'm looking to set up that initial position that lets me sell those premiums like in the next trading day or two. Once I get those signals. Once I've got that in place, it could be even sooner than that. I'm expecting to have it, come down to about $5 or $4, and then I'll sell that premium. And yeah, just remember, everybody, when implied volatilities are high, you want to be selling options. And when in this particular case, they're incredibly high, you want to get into the business of selling these things.
For sure. All right, AJ's pick of the week, APLD. We've got three other names from our lovely fans from all across the world. So, AJ, let's go ahead and run through them. We've got about 10 minutes. Starting on the West Coast, my coast, Lynn in San Jose, California, wants to know your take on a company called Ouster, ticker
Ah,
symbol OUST. This might be a new one for the show.
yeah, I think it is. Uh, I'm actually interested in this company. When I heard that Lynn wanted us to look at this, Ouster is LiDAR technology, right? Their LiDAR
Mhm.
technology has gotten so inexpensive. My wife and I are looking for one of those lawn mowers that goes and mows your lawn, kind of like a Roomba does. I don't even think iRobot is doing very well, but those automation vacuum cleaners inside your house. My wife and I have been shopping for those lawn mowers that just go out and mow your lawn throughout the day, just like the Roomba does your insides. With that said, most of them are using some old technology, this GPS and RTK technology. And if you're like us, where you got a lot of trees obscuring the sky, and the GPS signal gets mixed up, that ain't going to work. LiDAR is really, in my mind, the future. And the fact that LiDAR has come down in price so quickly, and you guys know that I love these autonomous cars, and I feel like even Elon has hinted that Tesla, even though he's been huge against putting LiDAR, now that LiDAR has come down in price, he's talking about putting LiDAR on the Teslas. Ford has a patent for putting LiDAR in the headlights of their trucks and cars. So I'm all about LiDAR. So right away, Len, I like what you're talking about. Let's take a look at the technicals, though. I can see as well, this company is still kind of cutting edge. They're not making money. It looks like they lose money a little bit each earnings. So they're still trying to make things work. I do like the price of this stock. I'm going to go back to about a year to see. Okay, so, and I do like that they're sideways channeling, and I've overlaid that fast MACD indicator that we've been talking about. And so I do like that the fast MACD gives us pretty good signals. I'm not sure. We got a little blip currently going on here, maybe a double top forming. So yeah, here's what I think that this could be a good premium trade. We do have to do one more thing, and we do need to look this up on our options lookup tool to make sure that the option chain is, you know, good enough for us to trade options on. So let's take a look at these August. Okay, trading every dollar. I definitely like that. So let's take a look at the bid-ask spread on the at-the-money options. Yeah, this one's a little bit suspect. But if we look at some other days, it looks like there's enough liquidity, there's enough open interest for us to get into the business of doing option trades. So it passes all the check marks. So what that would mean here is if we form a double top here around $12, get ourselves another top confirmation, I'd want to short this thing, or I'd want to buy some put options that are far out in time and deep in the money to get me in the business of selling those put premium options that are near term and at the money in the next, months, right? Maybe as early as the middle to end of June, and then do it again in July, August, create that payday every third Friday of the month. So I see what you're seeing. I would, again, just like I said with my stock, which was Applied Digital, I would say make sure you've got the signal and you don't short this position till you see the whites of their eyes. But yeah, I see what you're seeing, and it passes all the tests. We could turn this into a premium trade, I think.
Yeah, I had to look up these remote lawnmowers that you're talking about because I've never heard of it, and it looks pretty slick.
Yeah,
Maybe that's
I looked at that one, the one that you have on the screen. I looked at that one. That one's still using GPS. The one that now has LiDAR, it's called the GOAT, GOAT, and it's made by Ecovax. And it's probably the one. It's a little pricey, but I was saying to my wife, the fact that we would never have to really go and mow our lawn again, I think that is worth the price, even if we're early adopters.
hey, make a video, get some of the view dollars back on that. But I just have never heard of it. So I love the vacuum concept. To think that there's a lawnmower concept, uh,
Yeah.
we'll keep an eye out. If you make that purchase, let's post something on the socials. All
Yeah,
right, so that
yeah.
Lynn, two really good setups. I feel to start,
Yeah,
heading
yeah,
into the
yeah.
weekend. Let's dig into our third. Kevin out of Boston, Massachusetts is interested in your take on Akamai Technologies, ticker symbol AKAM. Still don't know what these guys do either.
Oh, these guys, they have some platforms for streaming. How we use Restream. I think this is and they typically go B2B rather than the little guys like us. Um, so cool. Um, let's take a look. And these guys have been around actually behind the scenes for a while. They do really well actually, given the price of their stock. Their earnings are not bad for being on the technology side of things. I think they're more on the robust side. So yeah, okay. We've got a couple of tests of resistance. It looks like we're coming down for a test of support. Okay, here's my thoughts. My thought is that I want to own this stock. I don't want to short it. I think I want to own this stock, or let's see if we've got a substitute call option that we could own instead. Maybe get a little bit of a discount on it. I'll do this and I'll do this and see. So if I want to use a substitute option for selling premium, I want to go pretty far out in time, at least out to the January 2026 leap, right? And then I want to go deep enough in the money that my extrinsic value component goes pretty low. So I'm looking at this $45 call. I don't mind it, meaning I think I could go with it. Maybe even the $50 call. Actually, I like the $50 call better. So this is the January 2026 $50 call. It's going for about $28.60 as of the end of day yesterday. That's so much cheaper than buying the stock at $76. It's about a third of the price. So that's probably the play I would do. I would buy this $50 call, right? And I don't want to buy it right now. Who is this? This is Kevin. Kevin, I don't want to buy it right now because I got this signal, but I didn't get follow through and the signal got reversed. I want to wait until I get this signal again, this light blue arrow. And I would love for it to come back closer to $70 rather than $75. So let this drop a little bit more, get another blue arrow, make sure it's got follow through, and then let's buy that $50 call, right? As many contracts as you can, so long as you're within your risk profile. Now we're set to sell call premium. So far, we've been talking about selling put premium. What we're going to do is every time this tops out, sell call premium, turn it into a money maker for us. I love it, but it's a little bit too early. I want to let it drop a little bit, and then we'll go ahead and set that trade up.
Yeah, a little definitely more expensive than the first two names we went over, but could be a good long-term hold. So thank you for that, Kevin. Moving on to our third and final name. I'm interested to see what's going on here. Joe out of Detroit, Michigan wants to know what's happening with gambling. Las Vegas Sands, ticker symbol LVS. Is Vegas dying?
Well, I think Las Vegas Sands is in more than Vegas these days. I think they're
True. That's
kind
true.
of all over the place. Is Vegas dying? I mean, I like going to Vegas. Maybe not for the gambling, but for all the cool shows. But all right. Yeah. So again, two tests of resistance up here at about $44. It looks like, although we did get follow through. Let me bring us back to more recent price action now that I've looked at the bigger picture. So I got this signal on May 16th. I got follow through on May 20th, which by the way was my birthday, which is cool. But then it stalled. So there is an opportunity for us to do this again. You know, the idea, maybe you want to look, I'm seeing a little bit of what we call a pennant pattern, maybe a flag pattern forming here, which is a consolidation. So you may want to make sure that this pennant pattern, once it breaks from it, it breaks down. But I could see if you haven't already either shorted Las Vegas Sands or bought that substitute option, and in this case, the option would be a put option. You will, again, deep in the money, far out in time. And when I say far out in time, like you've seen me talk about January 2026, deep enough in the money that the extrinsic value is whittled down to less than 5%. That's the substitute option I would purchase. And then you're set to sell put premium every time we get a light blue arrow with follow through like we did not too long ago. So Las Vegas Sands, sorry, I'm betting against you, but I'm betting against you, and then I'm offering put protection to those people who are with you. So I'm offsetting all of that. But yeah, that would put me in a good place to turn this into an income generating stock.
Yeah, I don't know the last time you've been to Vegas, but inflation definitely hit hard there. I mean,
Oh, really?
if you just look at things that used to cost, you know, what they used to cost 10, 20 years ago versus now, it's just crazy. It's just not the same experience. And now that everyone has social media, you know, they're posting a lot of videos about it. So
Are you
maybe,
saying that like slot machines are now $1 instead of 25 cents?
oh man, they're like $5,
Oh
$10.
my goodness.
Well, not even that. It's more of the drinks and the food and the
Oh,
entertainment that's just like
yeah.
astronomical because they have to make their margins
I mean, the strip
on
has
things.
always been quite expensive, you know. And then you go a little bit out from the strip, and then it's almost in a lot of those places around Las Vegas when you're outside of the strip. It's either neighborhoods that are really affluent, or it's quite seems quite underserved, quite poor. So that's an interesting place, Las Vegas.
Yeah, only 3 hours for me, so I tend to be there a little bit. I mean, that's kind of like you to New York, right? Like every once in a while, you get over there, and
Three
yeah,
hour flight or 3 hour drive?
3 hour, 3.5 hour drive, about a
Oh my
half
God,
hour.
that must be the most boring drive. It's a lot of nothing, isn't it?
True. But they have these pretty slick private jets now, JTX, JXT or something. You get a ticket for like $100 and it's like private. It's you feel kind of like a boss. And
Ah,
it lands in a private terminal. So like you're literally just coming off the airplane and you don't got to deal with all the airports and stuff. Very popular for the LA to Vegas routes. Anyways, all
cool.
right. Lovely names from our lovely viewers all across the world. So thank you, everyone. Lovely setup by you, AJ. Applied Digital, APLD. The end of the month next week, we'll be heading into June. What do we want to leave our viewers with heading into the weekend, and how they should position themselves, etc.?
So technically, watch the S&P. We haven't bought into this little bit of confusion that we've had this week. We still think that we're on this down move. We want to find out where this down move takes us, or we want to know that, we're done with the down move and we start rallying again. So technically, look for the next bottom of the SPX. But also, let's pay attention to what's going on with the tariffs. Specifically, are they on? Are they off? Is Trump allowed to do them anymore, or do they have to be done by Congress? Let's pay attention to that one particular news headline. And then let's also pay attention to what happens with this big, beautiful bill that has passed one part of our legislature, but is now stuck or is now going to the next one. Let's pay attention to those things, as well as, I hate to say this, let's pay attention to the Twitters and the Truth Socials about what happens on a day-to-day basis.
Yeah, it's just so that you don't get caught in a
With
move
your pants
against
down.
you, because that actually is a little bit more painful than the FOMO part, which is why you should always have your risk parameters on. And if you're uncertain, unsure, want to get in but don't have the guidance, head on over to AJ's Quicks link page. We've got all the socials. We've got a variety of ways that you can get involved and join the program. So if that's something you're interested in, head on over there, sign up. If you have any questions, feel free to leave a comment on any of the streaming platforms. Send us a DM. Head on over to the website, tradingtrainer.com, to get more information. And show some love. Hit that like, hit that follow, hit that subscribe button. We truly appreciate everybody tuning in today. And with that, folks, we'll catch you guys next week.
Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.